On today's video, I'm going to discuss all the sales that took place for multifamily transactions in Orange County between 5 and 100 units that took place in the second quarter of 2025. That's anywhere between April 1st all the way through June 30th. So let's dive in. We broke up the sales comps between coastal, inland, excluding Santa Ana, and then kept Santa Ana as its own market. So diving in, let's talk about coastal first. There was a total of 8 transactions that took place within the market. And this is all the way from San Clemente all the way up to Seal Beach, all coastal markets in between. There was a total of 8 sales. The average price per unit was $490,000 per unit, and the average price per foot was $664 a foot. So overall, coastal has been in high demand. We've talked about this on prior videos. We've seen a lot of buyers trading into the coastal market. They want to buy in these great locations. Rental rates are very strong. Homeownership is very high in these markets, but a lot of people want to live in the coast, around the coast. So we're seeing high rental demand, no real softening on the coastal markets, and that's fueling buyers to then come in and acquire these properties at relatively low cap rates, definitely below the cost of debt. So we love coastal. We closed 2 transactions along the coast. One was in Huntington Beach, 18 units on Yorktown, and also we sold a beautiful property in Westside Costa Mesa, 13 units on Victoria Street. That was a mix of townhouse units and single-story bungalow units. Again, it's quality properties that are getting picked off within the marketplace. And both those properties sold at high water marks for the particular type of product they are and the location they're in. Moving on to inland Orange County. This is Anaheim, Fullerton, Buena Park, Tustin, Garden Grove. There is high demand for these properties because they're well located and they're below replacement costs. So we see a lot of investors outside of Orange County that want to acquire assets here. And they also are really looking at the returns, the yields, the cap rates, the cash flow. And again, home ownership is still high in inland Orange County, and there's a lot of folks renting, and there's high demand for these properties. We've seen a little bit of softening in certain streets and certain markets, but overall, very healthy, stable assets that are producing stable cash flows within the market, which is creating a lot of demand. And we've seen buyers step up in acquiring assets. Some sellers have kind of capitulated and met the market. Some properties have sold right away. Some have taken a little bit longer to clear. But we've seen that to be a very stable market. It's most of where the transactions take place. So we saw an average of $324,000 per unit, and $410 was the average price per foot. All right, so moving on to Santa Ana. Santa Ana had 4 sales that took place, and this actually is a little skewed. We saw the prices higher in Santa Ana for these 4 properties than inland Orange County, and there's stricter rent control within Santa Ana. So what we saw was 4 sales, the average price per unit was $377,000 per unit and $399 a foot. 2 of those properties were really nice, desirable assets. One was single-story little cottages on a large lot, and another one was large 3-bedroom units that were built in the 80s. So if you've got quality real estate, what the market is telling us, assets are going to get picked off, regardless if it's in Santa Ana. Some of these are still high watermark prices. So quality real estate is what is in high demand. Nicer properties are still getting strong prices. So that overall is a summary of the transactions. We saw the largest transaction, both in dollar amount and unit size, was the same property, which was 52 units in Garden Grove that sold for $16.4 million. This was actually purchased off market. A broker in the marketplace purchased the asset. So directly from the ownership. It didn't appear to be marketed, but they made a transaction happen and it closed. And that was the high watermark on deal size and dollar volume. So moving on to also another important point, and this is what we really talk to a lot of sellers about, is what are properties really selling for? What is the average list to close ratio within the marketplace? And the average that we were able to pull from the data was 94% list to close ratio. So properties sold just about 6% off the asking price on average. Some sold right at the asking price, some sold way off the asking price, just kind of depending on the property. And a lot of that kind of goes back down to the product. If there's challenges with the assets, if a buyer needs to come back and try to renegotiate and get a credit because there was some discovery on the property they didn't budget for, that can kind of skew that number a little bit. But overall, that's a healthy number. I mean, certainly as we represent sellers in the marketplace, we want to get as absolute much as we can for the property. The two that we sold were in the 97 and 98% range. But again, some assets are just challenging to get sold and do just require more money from a buyer to put into the property. So that's where potentially sometimes you see a renegotiation take place. So overall, that is the summary. One thing we want to talk about is the on markets, right? So if you're a seller and you're putting your building on the market, you really want to see what else is available in and around your building and how does it compare to your property? Because that can really be competition when there's more buildings for sale than there are buyers. So right now what we have is there's 103 properties that are currently on the market for sale in Orange County. And not every property is clearing. It's taking a little bit longer to really get a property sold, right? Sometimes it's just days on market for the right buyer to form in the market, or maybe a change in the marketplace. Like now we've got 100% bonus depreciation is back restored in the marketplace. So it's gonna be interesting to see how that plays out. A lot of people are gonna be incentivized as we move towards the second half of the year to then get property sold so they can offset some of their taxes. So I think that's going to be great for our marketplace. But overall, we saw an uptick. There was 25 sales that took place in Q1. Now we're talking 42 sales in Q2. I think that's a much healthier number. But again, the days on market, properties for sale, we need to pay attention to that. I mean, over 100 properties on the marketplace. Buyers have choices. But if you have quality real estate that you're selling, buyers are more than likely going to step up and come to you. And I think that's definitely positioning you in a position of strength, really, as a seller. Quality assets are selling in up markets, in down markets, in sideways markets, in higher interest rate markets. People are flocking to quality, and product now is more important than ever because renovating a property is much more expensive today than it was in years past. And then also, it's just that it's so expensive, right? I mean, look at the interest rates. People are already trying to finance something and then to put money back into a building, they've really got to figure that out too. So it all kind of plays in together. But I'll tell you what, tenants are looking for better product, right? There's typically less turnover with better product. Washer dryers in the units. You've got AC in units. You know, people look at product now. It's just not a commodity. And we really got to manage these assets for cash flow, especially if we're not seeing rents really grow at the level we did over the past few years. So I think the professionals, the operators are really leaning into this marketplace. There is a huge appetite for buyers in the marketplace. There are so many more buyers that want to transact. It's just the right product hasn't come up for sale. Or if you have a really good building, you can really only sell to one buyer. So there is a lot of sideline capital that probably not a lot of people on the video are really seeing, but we're hearing firsthand being a broker. We're seeing a ton of buyers that are just, they've had their money in treasuries, they've got their money in money markets, it's been sitting there, they've kind of watched the market kind of settle in, and interest rates have been higher and elevated. Now they want to get their money back to work. So if you're a seller, you're thinking about taking your building to market maybe later this year or possibly in 2026, I would say reach out to a broker. We're happy to help you in any which way we can if you'd like an opinion of value on your building. But I will tell you that the market's pretty stable and investors have an appetite to acquire multifamily real estate here in Orange County. So if you'd like this report, I can put it together, send you a PDF. If you want to talk one-on-one, let me know. The team is here and happy to help at CBRE. This is really why we do what we do. We want to lean in and help customers serve investors in the marketplace, especially when the very important decision comes when it's time to sell an asset. We want to lean in and help any way we can. Thanks so much for watching, and we'll see you again soon.